Hi everybody, this is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, January 22nd, 2024. So we saw the bulls gap the market up again. It seems to be their flavor of choice. And I had put in the morning notes that, you know, if you're a newbie or you're looking to put some money to work, I'm not really against building, shorting up here. We've gone. I gave all my reasonings in the morning notes, so I don't really want to go over them in depth. But I'm starting to see a lot of people that are valuation traders. So these are some of your bigger boys that are, they're questioning where the market is right now because our economy. They're not even sure if we're going into a recession or not, and yet you have the S&P, basically all the indexes that are in all-time highs, and really the prime reason is they're anticipating the Fed's going to cut rates 6 times, and as I've explained in nauseum is if the Fed is going to lower rates 6 times, we are going to be in a full-blown recession. So, it's kind of, they have the bulls have the momentum, but there's a lot of things that I've gone over that, I've basically shown you where these are intermediate term sell signals. And unless this thing, you get a massive move in the advanced decline, this is a sell signal. And if you notice, we have not, we had a little one here, but that fixed it almost the same day. But we haven't really seen any. So this is really the first ones that are in place right now, and that's going all the way into when we were in August. So it's important to keep an eye on those because they get ignored. Everyone just keeps going off of their the reasoning on why, the market's going to go up and nobody looks down. And then a lot of people are just wondering, why were they buying up there? It happens a lot. But, right now we have this reverse symmetrical triangle. Remember, it allows for it to break out of it. Now, what has to happen? It has to come back in. The longer it stays out of it, unless it just keeps using this, just goes up a little bit more and uses it. But it really has to start coming down sooner rather than later if this pattern is going to play out. And one other pattern, so I have a few, there's a bunch of lines on here I just noticed. So the black line, this is the reverse symmetrical triangle. The red line, this is that the bearish wedge, it's a different kind of wedge than what the typical one is. But anyway, what this is that this is the target, and you can see it's actually matching up with the lows of the reverse symmetrical triangle. So there's we have bearish divergences on the 15-minute charts. That's even after today's gap up. We look at the 60-minute chart. It's not really there. That's why I'm still kind of on the side that we're going to get some type of pullback back up, whether it makes a double top or not, but it forms some type of divergence, even though this one only produced a 120-point drop. And again, my primary reasoning for being very, very cautious up here is, this has gone up 700 points, and now you have this megaphone top. So this is where, traders are, you make lower lows, you make higher highs, and everybody's jumping in once we make those, and they're reversing it around. And typically, when it's at the top, it's a topping pattern. When this takes place at the lows, it's a bottoming pattern. So it's there. We don't really have the bearish divergences, so I'm leaving the door open for down up. But if they decided just to go down, it wouldn't really, I wouldn't be all that surprised because at some point they're going to have to digest what is taking place since since these late October lows here, because the market doesn't really move like this, not in this fashion, unless the Fed is pouring money into the system like they did in 2009 until 2021, where they were, just putting trillions into the market, and that was going into hedge funds that were then they were leveraging that money, and then you had regular companies that were buying stocks back, were buying shares back. So there was nothing else for the market to do but go up. But we're not in that situation, and that's kind of why I'm kind of scratching my head a little bit with everything. And One thing that I want to just show you is one of our biggest winners today was oil, which was up over 1.8%. That was the biggest winner. So again, and the reason why I keep pointing that out is, if oil starts going back up, this whole inflation under control thing gets thrown out the window, because once oil goes up, gas goes up, and when gas goes up, the cost of distribution goes up, and when the cost of distribution goes up, so does inflation. So it's one of the things that I just think it's a very risky bet. The bulls have been in full control, no doubt about it. If somebody was looking to say take a position but wanted some kind of confirmation on it, really the way that you would want to wait is you'd want to wait for a break of this 47.84, see if this support holds, and then just put your stop at 4,800. That would be the more conservative way. But if you're looking to build it, I mean, from here, I don't know how much more they have, just for really fundamental reasons and valuation reasons. That would be the first thing, but also these long-term, sell signals that I'm seeing. So let's take a look. So here you can see, let's take the 15-minute chart. This is the first resistance. This is where the gap was today. If they take that out, we have the support that's sitting right at this 48.04. It would make sense to see some bulls there and come back up and either test this high or get a little bit higher and then come down. And the bulls, it's kind of impossible to figure out where resistance is. I'm just going in increments of tens on it, because that's what I did this morning, and we ended up going up to the 48.70, and that's where sellers came in. But I guess my main point is just be very careful right now. Things are not as rosy as they are claiming right now, and the fact that they're pricing in 6 Fed cuts and the Fed's only telling you 3, and there's some that are saying that 3 may not even come, it's going to be a shocker to the market. And if that happens, you're going to see a lot of people running for the exit. I just don't want to see anybody getting caught in that. So anyway, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.